Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday to you all. Welcome to another edition of Breakout Investing on TFNN. Now 5 days a week on the TFNN network from 3 to 4 Eastern. Show used to be just 2 days a week, but we've gone to 5 days a week now. So thanks very much for tuning in. It's a call-in show. Give my producer a call, 877-927-6648 if you want to talk about this market. And don't forget, you can always access my show as a podcast on iTunes if you can't listen live. And you can also listen to all TFNN programming. If you're not at your PC, you're not in your car listening on the radio, you can access it on your smartphone. Just open your smartphone browser. Just type in tfnn.mobi. tfnn.mobi, and you can get the stream that way as well. If you want to look at charts live as I'm looking at them on the show, you can use Tiger TV to do that right on the home page of tfnn.com. Channel 1, the show is carried live, and it is archived on Channel 13. So be sure to check out Tiger TV. That is a good deal. And Tiger TV is also viewable on your handheld device as well. All right, well, some selling in the market today. Not a lot of juice behind the selling. Yesterday on the New York Stock Exchange, volume was pretty much average, 663 million shares. Right now, we're tracking about 5% lower than that today. On the NASDAQ, yesterday, volume also average at 1.72 billion. It is trading 5 to 10% lower than Monday. So it doesn't look like we're going to see distribution in the market today. I've been saying for some time that leading stocks continue to hold or hang in there just fine. When I'm looking at the ultimate growth stocks model portfolio, I have some stocks that are moderately lower, and I have several that are actually trading higher today in a down market. So, leading growth stocks continue to look pretty good here. So I don't want to be too early to throw in the towel, start raising cash, start taking profits, basically just not seeing serious enough sell signals in this market. Now, that said, we have had some higher volume declines in the S&P 500 in recent days. In fact, you go back over the past 8 trading sessions, not including today, but over the past 8 trading sessions, there have been 4 higher volume declines in the S&P 500. Now, before you get all, wigged out about that, one of them was on September 20th when the S&P 500 lost less than a point. And, I was going to talk about Apple first, but let me just pull up a chart of the S&P 500 here. And, actually I have a daily chart stored here. There's the S&P 500. Okay, so right now we've got the S&P 500 down a little more than 4 points today, 0.3% to 1440.75. Back to the volume here. There have been some higher volume declines in the S&P 500. There have been 4 in the past 8 trading sessions. Now, it has not been 4 unequivocal distribution days. That is important to keep in mind. There was 1 higher volume decline on September 20th, and that was when the S&P 500 actually finished near its high after early weakness, and it only closed down 1 point. Okay, so that was this day right here. Okay, looking or watching on Tiger TV. Then on September 21st, 1 day later, you had a big spike in volume in the S&P 500. It reversed after early strength, but even though it was a down day, it once again only lost less than 1 point. So you had 2 higher volume declines in a row, September 20th and 21st, but with declines of less than a point, and it just doesn't really look like meaningful distribution there. So it's not clear to me yet that this market is under distribution. Again, looking at the S&P 500, obviously having some trouble around some near-term support levels. S&P 500 once again today below its 20-day simple moving average, but still holding nicely above its 50-day moving average here at 1415.53. Okay, so S&P 500 has not broken down by any means. Let's take a look at the NASDAQ composite here. And we'll see that the tech index today is down a little more than 7 points, almost 8 points, 1/4% to 31.05. It is still holding above its 50-day moving average as well, which is right around 30.60. So let me pull up a different perspective here on the NASDAQ Composite. And here's the NASDAQ Composite with the 10-day, 20-day, and 50-day. Similar to the S&P 500, NASDAQ Composite is trading below its 20-day moving average, but it is still holding, again, above the 50-day moving average at 30.60. So market that may be looking a little bit vulnerable here, but not enough to make me overly concerned at this point. Let's take a look at a chart of Apple here, because this is the real story in the market. We're talking about the fact that Apple has been flirting, looking like it's intent on paying a visit to its 50-day moving average, and it is doing that today. It is down another $5.57, a little more than 0.8% to 653.82. It hit an intraday low of 651. Not surprisingly, its 50-day moving average is at 651.12. So it went right down to its 50-day line, has found support for now, but whether or not it's going to be able to find support here is questionable in my view. Apple used to be a current holding in my Ultimate Growth Stocks model portfolio. I did take profits in recent days, took a nice gain in Apple. I just think the stock looks a little bit vulnerable here. iPhone sales, or iPhone 5 sales, I should say, are okay, but they're not great. And yes, Apple still, sells at a very low valuation. And there actually has been some PE contraction over the past couple of days. Apple has not broken down yet, but it is looking vulnerable here. I wouldn't be surprised to see it ultimately firm up at the 50-day moving average, but then again, I wouldn't be surprised to see it break below the line here. So we'll just have to see. As Apple goes, so goes the market. Remember that Apple makes up about 20%, a little less than 20% of the NASDAQ 100 index. So if you do get a material breakdown in Apple, I can't believe it would be good for the broad market. But then again, the broad market is still acting pretty well here when you look at the number of leading growth stocks out there that are really not showing much in the way of sell signals. I think that is reason to be optimistic. We talked about increasing distribution in the S&P 500, also seeing the same general thing on the NYSE Composite Index. On the NASDAQ, it's a little bit different. There really have only been 2 higher volume declines in recent weeks, so that's not enough to really cause problems for this rally. Rumors were circulating earlier today that Spain could ask for a bailout as early as this weekend. It did bring in some early buyers into the major averages, but again, we are near session lows today, but again, the selling is not intense at this point, and volume right now is tracking below what we saw Monday on the New York Stock Exchange and NASDAQ. Transports, weakness in transports is still an issue here. Let's check in on the IYT. A lot of people saying, how is this market going to rally with the transports looking as weak as they are? And they are looking weak, no doubt about it. The iShares Dow Jones Transportation Average Index Fund up 3 cents today to 87.09. You can see it's stuck underneath some prior support levels at $90 and $91 a share. So this is a broken chart in the market, marred by a lot of institutional selling. Of course, just recently, not only FedEx, but also Railroad Norfolk Southern issued less than stellar guidance. So the weakness in transports is definitely an overhang in the market, but offsetting that is a XLF chart that really is not looking too bad at all here. The Financials Select Sector Spider Fund, which is basically a basket of financial stocks, it is down a penny today to 15.65. It has pulled back in mostly light volume over the past couple of weeks. Has been under some selling pressure, but still holding above support at 15.20. The new swing point here is 16.44. That would be the high that it set just before it started to pull back. Earlier today, Credit Suisse had pretty decent things to say about the financial sector. The sector is not responding today. The XLF did hit an intraday high of 1576, but is now trading at 1565. So trading in a really tight range today. But Credit Suisse upgraded the sector to overweight today, saying that third quarter loan growth at many of the financials could be surprisingly strong. So The XLF trading near its session low after early strength. Let's check in on Bank of America in the Dow. Bank of America, very similar looking chart here. It is near its session low after early strength, now trading around $8.90, down 6 cents on the day. And also in the Dow, JP Morgan lower after early strength as well. But JP Morgan right now down 14 cents to 40.83, but still a decent technical setup here as well. Some sellers in lumber liquidators today. Let's check in on shares of LL. Selling pressure pretty intense today, heavy volume. There was another small boutique, a little-known equity research firm called Off Wall Street that basically called Lumber Liquidators, which is a hardwood flooring retailer, basically called it a $25 stock. Lumber Liquidators right now trading at $48.54, still showing impressive action here at its 50-day moving average. The stock is down $2.66 today, a little more than 5% to $48.54. So Lumber Liquidators has been on a massive price run. A lot of reasons for its strength. We've got a housing market that appears to have bottomed. Still some bears that will say this is not the case, and 2013 could be another year of mostly weak demand in the home building sector, but Lumber Liquidators is still hanging in there. It is extended. It is trying to find support at its 50-day moving average. I'm not really interested in the stock up there, but the home builders have been under pressure. Let's check in on the ITB, the iShares Dow Jones U.S. Home Construction Index Fund, still holding above its 50-day moving average as well. So, until we start to see stocks and ETFs and even the major averages, if you do see a break below a key support level like the 50-day moving average, that can be problematic. That will probably be problematic for the market, but just everything that I'm looking at basically is still holding above support, so no reason to get too bearish yet. ITB, the home building ETF, is up 5 cents today to 1933, not showing much in the way of technical damage. We have such a busy day of headlines, too much content for one show, but we'll try to get to some leading stocks out there acting well. We'll talk about some economic data, some IPOs set to come public this week. We'll do that when we come back. 877-927-6648. Give me a call, folks. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Apple mentioned still holding above its 50-day moving average, but not by much as the stock remains under selling pressure. Interesting story in Investors Business Daily earlier today by Ken Shreve said that Google is still the number one smartphone operating system in the world, according to new data from ComScore. The Android operating system ran 52.6% of all smartphones in the U.S., up just a little bit from 52.2%, but Apple ran 34.3% of U.S. smartphones in the period. That was up slightly from 31.9% in the third quarter. So combined, Apple and Google control almost 87% of the smartphone software market. That is up from 83% in the second quarter. All right, taking a look at some other data points today. Crude oil down 0.6% to $91.89 a barrel. Gold for December delivery fell $7.70 or 0.4% to finish at $17.75.60 an ounce. Let's check in on the Spider Gold Trust here. It is down 32 cents, 0.2% to 171.97. The GLD has been moving sideways. In fact, if you take a look at a weekly chart for the Spider Gold Trust, what is really interesting here, and I know I've said this before, but it is still interesting. A lot of people calling gold a crowded trade with the dollar as weak as it's been. The dollar's been in rally mode lately, but still acting generally soft. The GLD it still has not broken out over its February 28th intraday high of 174. So you can see the weekly chart here, still in a good technical setup that, frankly, chart patterns like this have yielded meaningful breakouts in the past. If this dollar continues to act weak and can't get out of its own way, which seems to be a likely scenario to me with Fed policy the way it is, there are some potentially market-moving dollar headlines coming forward. We've got the jobs report coming up this Friday. You never know what headline is going to come out of Europe that could weaken the euro and maybe bring more money into the dollar. But GLD technically still looks bullish here, even though a lot of money has been coming into gold in recent weeks. GLD has not technically broken out yet. Economic data today, not really much. We did have auto truck sales. Chrysler really looked to be the star of the show. Sales at Chrysler rose 12% in September, led by its Fiat brand. Sales at Ford were essentially unchanged from a year ago at almost 175,000 vehicles. Small car sales doing very well at Ford, and sales at GM rose 1.5% to a little over 210,000 units. Yesterday we did get a good reading from the ISM Manufacturing Index, surprisingly good actually. Manufacturing data have been tough in recent months, but ISM Index went back into expansion mode in September, higher than expected, 51.5. Tomorrow we've got the minutes from the September 12th, September 13th Fed meeting. Not sure there's going to be anything surprising in there, with the Fed being very communicative with the market and their press conferences and things like that. So probably won't see a whole lot new in the FOMC minutes. Thursday, we've got weekly jobless claims. We've got factory orders for August. And then Friday, of course, non-farm payrolls for September. The economy is expected to add 120,000 jobs after 96,000 in August. Unemployment rate expected to hold steady at 8.1%. U.S. dollar index today down, but that's not helping the market. U.S. dollar index recently trading around 79.70, down about 12 ticks. The yield on the 10-year note down again, but not by much, 1.61%. The yield on the 10-year bond is looking to close lower for the 11th time in 12 trading sessions. So bond yields under a lot of pressure recently, and the yield on the 30-year note currently around 2.81%. All right, let's take a look at shares of PetSmart today. PETM. This is really a well-run retailer. PetSmart has been consolidating gains. News late yesterday is that it's going to be added to the S&P 500 effective October 4th. It's going to replace Sunoco, which is in the process of being acquired by Energy Transfer Partners, ETP, on the New York Stock Exchange after early strength. PetSmart looks like it's finding a little bit of resistance here at its 50-day moving average. This is a concept I talk a lot about, but after hitting an intraday high of 69.55, shares of PetSmart up 1.3% to 68.42. Near its session low, trying to get back above its 50-day moving average, but having some problems here in the near term. All right, folks, 877-927-6648. Give me a call. We'll be back in about 4 minutes. Stick with me.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Thanks very much for tuning in. Always appreciate it. Quick check on the markets here. The Dow right now down a little more than 52 points, 0.4% to 13,462. NASDAQ fighting its way back here, only down 1 point to 3112, and the S&P 500 also coming back down almost 2 points to 1442. Let's check in and see how shares of Apple are doing here. I would imagine since the NASDAQ composite is fighting its way back, Apple is too, and that is the case after hitting an intraday low of 650.65. Just actually undercutting its 50-day moving average just by a hair. Apple right now is working its way back. It is now at 658, down $1.39 on the day. Apple's price action is of a little bit of concern to me, but again, there are so many other stocks out there acting right in this market. I'm not sure that the market is going to, fall apart just because Apple falls apart. So for now, it is holding above a key support level. Did you hear David? I wanted to touch on David Einhorn's comments earlier today at the Value Investing Congress in New York. I know I had it here somewhere. He made some interesting comments today, particularly about Chipotle. And let's check in on shares of Chipotle here. I believe he is short the stock, or he is not that enthusiastic about business prospects at Chipotle. You can see the stock is having a wild day today, down $14.84, 4.7% to $301.29. He actually said, and this really struck me as strange, but he said that Chipotle is facing challenges from Taco Bell, a restaurant that has a completely different customer base than Chipotle. I don't know what he's thinking. I have to admit, I have not read his comments entirely, but he did mention Taco Bell and seemed to make a comparison between the two. Very, very strange, totally different customer bases. People that eat at Taco Bell, listen, my 14-year-old kid, he likes a good meal at Taco Bell, no doubt about it, and he'll also eat at Chipotle, but it's really two different customer bases here to say that Taco Bell is some sort of competitive threat to Chipotle. I've talked to a lot of people today that don't know really what he is talking about there. Is Chipotle a technically challenged stock? Without question, it is a technically challenged stock, and to say that it's facing challenges, well, clearly that's what its chart is saying right now. I don't think that Chipotle is on sale down here at $301.29 a share, but yeah, very interesting comments from noted short seller David Einhorn today. He did talk about Cigna as his favorite HMO. Let's take a look at shares of Cigna. I'm sure that is acting well, and sure enough, you have a recent breakout from a nice little cup with handle base for Cigna. It is up 1% today to 48.55. Recently breaks out over a swing point just underneath 48. So this one still actually looks like it's within buying range here. So positive comments from David Einhorn today about Cigna. And yeah, I don't know. I had a little something put together for this. Basically, what Einhorn was talking about, but I don't see it. He also made negative comments about Green Mountain Coffee Roasters. Nothing surprising there. He still thinks the stock is vulnerable here. Green Mountain hits an intraday low of $22 a share. It is back near its session high, trading around $23.93, up 2.7% on the day. Another stock under a lot of pressure today, Zillow. I got to tell you, I was keen on Zillow not that long ago. This stock definitely had the look of an emerging leader. Recently tried to break out over $44 a share. This is a stock, if I buy a stock in anticipation of a technical breakout, or I think the chances are good for a technical breakout, or if I buy it on the breakout day when volume is coming into the stock, I fully understand investing in growth stocks for as long as I have, that sometimes breakouts are not going to work. And if a breakout fails miserably, it's generally better to just cut your losses short, 3%, 4%, 5% below your purchase price, and move on. Just admit that the timing was wrong, and I sure am glad I did cut losses short in Zillow, because I was out of this one a while ago, and it is down 4.8% today to 38.88. Clearly a failed breakout here. The stock took out its 50-day moving average in huge volume. The story here is that the real estate website is being investigated by the Securities and Exchange Commission. The SEC requested information on the company's accounting methods. Zillow downplayed the inquiry, but that has not stopped sellers from coming into the stock today. So Zillow no longer on my radar here. It looks like a broken stock to me. Let's take a look at shares of Illumina, ILMN, a stock that has had a tough go of it recently, but has this was back earlier this year in April and May when the company announced disappointing earnings, but stock's having a good day today, up 4.3% to 51.13, down near its low for the day. But the news here is that I believe it was a London paper. Some published report said that Swiss-based Roche Holding may be interested in acquiring Illumina in the $60 a share area. Illumina makes DNA sequencing equipment. Staying in the healthcare space, we'll take a look at shares of Celgene. I think we had a technical breakout here. Well, not quite. Its chart looks good, forming a little bit of a handle area here. Celgene up 2.1% today to 78.36, sitting just underneath a swing point of 78.63. Let's take a look at a weekly chart for Celgene, and we'll see a nice technical setup here. The news on Celgene today, the company said a primary endpoint was achieved in a late-stage investigational study of its breast cancer treatment, Abraxane. So you've got a nice cup-shaped base here for Celgene. You could still see a handle area form in this base, but it does look like the stock is trying to break out over 78.63. The news today about Abraxane, not enough to fuel a bona fide breakout for Celgene, but still, a stock that's acting pretty well. Looked like it was going to be a good day for PVH. Phillips Van Heusen, but this is another one kind of questionable technicals at this point. It is down 12 cents to 92.83 after hitting an intraday high of 94.60. Doesn't look like a breakout is imminent in shares of PVH. Company used to be known as Phillips Van Heusen. They raised their earnings guidance thanks to strong performance of key brands like Tommy Hilfiger and Calvin Klein, but that was not good enough for the market. Looks like PVH is on pace for its fourth decline in the past 6 trading sessions. So you do have a breakout that looked like it was taking shape for PVH. In fact, let's go over and take a look at a weekly chart, and we'll see a nice technical setup here, a swing point of 95.98. Not out of the question that this stock could still break out over that swing point, but disappointing price action in the stock today. A couple of earnings reports to take a look at. Let's take a look at TISI. T-I-S-I. The company is called Team Incorporated. It's trading near its session high, up 5 cents only to 33.02, but a pretty impressive performance for the stock considering it hit an intraday low of 30.76. Team provides services related to the maintenance, inspection, and construction of mechanical systems and also piping systems used in the energy industry. Earnings were up 9% from a year ago to 36 cents a share. Sales were up 14% to $161.5 million. That was nicely above the consensus estimate of $156 million. So Team recovering after early weakness. And then in the fertilizer space, last check, not such a great day for shares of Mosaic, trading near its session low, down 4.3% to 55.51. This is not the leader by any means in the fertilizer group. I think you'd have to, talk about names like CF Industries, ticker CF, maybe Rentec Nitrogen, ticker RNF. And also Agrium, AGU. These are the real strong performers in the group. Earnings and sales growth at Mosaic declined from a year ago. Earnings were down 15% to $1.03. That was below the consensus estimate of $1.15. Sales were down 19% from a year ago to $2.5 billion. That was also below expectations. Mosaic's results were hurt by lower phosphate production and pricing pressures. Also, just so many headlines today, just hard to get through them all. But Zumiez is a stock that has really been hit hard back in the summer. It was a $41, $42 stock. It corrected all the way down to $25, $26 a share. Right now, it's basically trading at $26.69. So a big pullback in recent months for shares of Zumiez. This is a company, though, when you look back in recent quarters, you see good, solid bottom line and top line growth. Still a company that it sells athletic apparel, accessories to the skateboard, the snowboard crowd, kind of an action sports apparel retailer. But earlier today they said that same-store sales in September rose 5.6% from a year ago, and total revenue for the 5 weeks ended September 29th rose 19% from a year ago to $62.7 million. But kind of a crummy day for the stock after hitting an intraday high of $29.50. Shares were recently trading around $26.69, down 2.9%. So early enthusiasm for shares of Zumiez faded quickly today. And also Juniper Networks, JNPR, shares of Juniper Networks, another broken stock here. You can see it recently tried to reclaim its 200-day moving average, got turned away, is now below its 50-day moving average. The company is in the middle of a big cost-cutting initiative. It said it was going to lay off about 500 employees, reduce its workforce by about 5% to meet its cost-cutting goals. It is mostly unchanged on the day, up a penny to $16.78. Shares of Google have been under pressure for a good portion of the day. Let's check in on Google. It is down $5.12 to $756.66. Tremendous price run for Google. In fact, if you look at a weekly chart for Google, it is working on 12 straight weekly price gains. An incredible price run for the search giant. I think a big reason behind its price performance is that growth fund managers know that they're getting earnings stability, they're getting stable earnings and sales growth at Google. Search remains the company's core business, but there's optimism about the Android operating system and some other initiatives that Google has going on now. But an impressive run for Google. I would not touch it up here. It is a very extended stock after a recent breakout over $655, $660 a share after 12 straight weekly price gains. I would not be surprised at all to see Google eventually pay a visit to its 10-week moving average, which is about 56, 58 points lower than where it is now. But even if it does come down to its 10-week moving average just under $700 a share, that would be a constructive pullback after the enormous price run that it has made. Okay. Here's my Einhorn notes. I know I mentioned Cigna, the HMO, got positive comments from Einhorn today. We talked about this comparison he made that CM Chipotle could be facing a competitive threat from Taco Bell. Very, very strange. Talked about significant. So I guess that's all that I had. He also talked about GMCR still being vulnerable here, and says significant downside risk to shares of GMCR. A restaurant stock today that I had actually never heard of before came across my radar today, and let's take a look at Chuy's. Chuy's Holdings. This is a company that came public in July at $13 a share. They operate Tex-Mex restaurants, Mexican restaurants, not only in the state of Texas, but also in areas of the Southeast and parts of the Midwest as well. But pretty good balance sheet here. I think it's arguably a restaurant that still could be in the early stages of growth. You can see that Chuy's is working on 6 straight gains, looking a little bit extended here after a recent technical breakout over $24 a share. Shares of Chuy's recently trading at $28.24, up 3.6% on the day, but it does look like a recent new issue that is under accumulation. So I would wait for a pullback here, but interesting IPO. Again, they came public in July at $13 a share, so that is a quick double and then some in shares of Chuy's Holdings. Other setups to watch in this market, whether or not they work remains to be seen. Again, there is some distribution in the market that is worth paying attention to. Tractor Supply showing some sketchy price action, especially yesterday and today. It is down 11 cents to $97.88 after hitting an intraday high of $100.20. There's a swing point here of $101.28, but I'm just wondering if it is going to break out. It may not, looking at its price action yesterday and today. All right, folks, headed into our final break on the day. We'll do one last check on the markets when we come back. You're listening to Breakout Investing on TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, as we head into the close here. Put the finishing touches on Tuesday's session. Check in on the NASDAQ composite. It has turned positive, not by much, up 3 points now to 3116. And the S&P 500. Let's check in on this benchmark index. It is right around the flat line here, down fractionally to 1444. And we haven't checked on the Dow Jones Industrial Average. Let's do that. We'll see the Dow is still under a little bit of pressure near its session low, down 45 points, only 0.3% to 13,470. So some mild distribution on the New York Stock Exchange indexes in recent days to pay attention to. But when you look at the overall picture of leading growth stocks, the market leaders since late July, early August, the overall picture looks pretty good. So I'm staying optimistic about the possibility of stocks ending 2012 with a bang. Again, it's not impossible that the Dow, for example, could pay a visit to its 50-day moving average here, down around 13,227, just like it wouldn't be surprising for the S&P 500 and NASDAQ composite to do the same. Some other decent technical setups out there. Last check, Lululemon Athletica. Still have mixed feelings about this stock, but it is outperforming nicely today, up 3.8% to 76.34. And Lululemon looks like it wants to try to break out over the swing point of 78.97. Still has a ways to go to get there, about 2.5 points underneath that swing point, but decent volume in the stock today, working on a bullish cup with handle pattern. Again, a swing point of 78.97. So that's not a bad looking stock here. Mentioned shares of MasterCard yesterday. This is another one. Not really sure if this is going to try to break out or not. It is sitting just underneath a swing point of 461.79. Shares of Apple right now up just 14 cents to 457.03, so it's about a little more than 4 points underneath a swing point here. Pretty strong balance sheet at MasterCard. Growth prospects don't look bad at all. And shares of Yandex. This is a Russia-based search firm, very similar to what Google does in the U.S. and Baidu does in China. Yandex also drifting lower in recent days, forming a handle area. Wouldn't be surprised to see Yandex eventually take out a swing point here just over 25. So some stocks out there that still could work. Market is just maybe a little bit heavy here, but so it's not an environment where I am actively looking to buy stocks on a daily basis. The model portfolio, Ultimate Growth Stocks model portfolio, has filled out nicely in recent weeks as I've been putting money to work and taking advantage of this market uptrend that we've been in basically since late July. So basically sitting tight with what I have working here. Definitely want to look to add to some of my stronger stocks. Hopefully the market's going to hang in there. Again, today, even though we're mixed right now, so even when we were lower, there was not a whole lot of volume in the market today. Right now, NASDAQ volume still tracking about 5 to 10% lower than what we saw on Monday. Same with the NYSE, about 5 to 10% lower than Monday's level. We do have some IPOs that are supposed to start trading this week. Don't know if they're supposed to be blockbusters or not, but Dave & Buster's Entertainment, that's going to trade under the ticker symbol PLAY. I think that's supposed to start trading on Friday. The proposed price range of $12 to $14 a share. Earnings reports coming up after the close. RECN, kind of a speculative small cap name, but decent growth prospects there. Tomorrow, Family Dollar Stores and Monsanto. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. Have a great afternoon, everyone. I'll see you back here tomorrow, 3 o'clock Eastern.